What is the stock market? Hey everyone, welcome back to the channel. Today we're diving into one of the most important topics in finance, the stock market. Whether you're a beginner or just looking to improve your knowledge, this video will break down the stock market, how it works and why it matters. So let's get started. At its core, the stock market is where buyers and sellers come together to trade shares of publicly listed companies. But what does that mean? When a company wants to raise capital, it can issue shares, tiny pieces of ownership. These shares are then bought and sold on the stock market. The price of each share fluctuates based on supply and demand, company performance, and broader external factors. So, if you buy a share of a company, you own a small piece of that company, and if the company does well, the value of your share could go up, but if it doesn't, it may go down in value. The stock market exists for two main reasons. One, for companies, it's a way to raise capital without debt. By selling shares, companies can fund growth, research, and expansion. Two, for investors, it's a way to grow wealth. By buying shares, investors can earn returns through capital appreciation, the stock price going up, and dividends, a share of the company's profits. Think of it like this. The stock market can be a win-win. Companies get the money they need to grow and investors get the opportunity to share in that growth. Here's how it works. A company decides to go public through an IPO, initial public offering. This is when shares are first sold to the public. Once shares are listed, investors can buy and sell them on a stock exchange, like the New York Stock Exchange, NYSE, or the Nasdaq. Share prices change based on supply and demand. If more people want to buy a stock, the price goes up, and if more people want to sell a stock, the price goes down. Of course, it's not just about supply and demand. Stock prices are also influenced by company earnings and new events. That's why the stock market can feel so unpredictable at times. The stock market involves several key players. The investors are individuals or institutions that buy and sell shares. The brokers are middlemen who execute trades on behalf of investors. Companies, the businesses that issue shares to raise capital. There are also regulators and organizations like the SEC, Securities and Exchange Commissions, that ensure fair and transparent trading. Each of these has a role in keeping the stock market running smoothly. Without them, the system wouldn't work. Some necessary concepts to know about stocks are market capitalization. This is the total value of a company's shares. It's calculated as market cap is equal to share price times the number of shares outstanding. Companies are often categorized as large cap, mid cap, or small cap based on the size. Next is the PE ratio, price to earnings ratio. This measures how expensive a stock is relative to its earnings. A high PE ratio might mean the stock is overvalued, while a low PE ratio could indicate a bargain. Dividend yield. This shows how much a company pays in dividends relative to its share price. It's calculated as dividend yield is equal to annual dividends per share divided by share price. And lastly, volatility. This measures how much a stock's price fluctuates. High volatility means higher risk but also higher potential returns. Investing in the stock market comes with both risk and rewards. The rewards can be over the long term. The stock market has historically provided an average annual return of about 7 to 10%, which is higher than keeping your money in a savings account. There's also the risks. Stock prices can be volatile and there's no guarantee you'll make money. You could even lose your entire investment if a company goes bankrupt. That's why it's so important to diversify your portfolio. Ready to start investing? Here's how. Open a brokerage account. Choose a platform like Sharesies, Interactive Broker, or Hatch. Do your research, learn about the companies you're interested in, look at their financials, growth potential, and industry trends. Start small. You don't need much money to start. Many platforms let you buy fractional shares. Stay consistent. Consider setting up an automatic investments to build wealth over time. Remember, investment is a marathon, not a sprint. The key is to stay patient and disciplined. That is the stock market briefly explained. There are of course more concepts and parts not presented in this video. but this video covers only the basics. Whether you want to grow your wealth, save for retirement, or learn something new, the stock market can be an incredible tool. Thanks for watching, and I'll see you in the following video. Thank you.